Home Loan Servicing Solutions is hoping to raise $200 million from the public solely so it can buy the assets out of Ocwen Financial. Francis, I took a look at this one and I think it's just awful. So what do you think?
Well, we both said for the same reason. It's based in Grand Cayman Island. Why do you need to do that? But what they're doing is they say they want to buy that portfolio of mortgage servicing rights, and that's kind of a small field. They're not even going to have their own proprietary software. They're going to buy someone else's software to service assets that they buy. And there's a few comments in the filing that create a problem, perhaps. What it says is they may not be able to acquire the rights. There's no guarantee they can, and the rating services may not be willing to rate them. So in this one, there's so many red flags. I don't see why anybody would buy it. What they're doing is they're selling 100% of the company between a concurrent private placement and an IPO, and they probably just want to try to sell it to make money based on the management fee for the advisors.
And they aren't the only ones going public this week in the mortgage field. We also have Provident Mortgage Capital Associates. They want to raise $125 million. So it's a newly formed company once again to acquire residential mortgage loans.
Yeah, that's a sweetheart deal for the parent Provident Funding Associates, and they say that they're the ninth largest originator of loans in the country. What they want to do is move towards jumbo loans. I'm not sure that's a great strategy, but what they're doing is they'll pay themselves 1.5% of the assets, and then they'll get an incentive fee on top of everything. If you look at their dividend, they don't have a projected dividend. There are lots of ways to participate with mortgage REITs. And what they're doing is buying their own in-house mortgages rather than selling them to somebody else and just funneling, I think, the management fee money to themselves. So I don't see any compelling reason to look at that one very hard.
All right, so investors really need to be warned and perhaps stay away from these two mortgage IPOs.